Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of XRP, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be able to be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7, and it is the first place that we go to notify you of everything that's going on in the crypto space. Okay, let's make a start with this one. So I wanted to start here because I do see the comments and there's a lot of negativity around whether or not we're right on this channel or wrong on this channel, and time usually does tell. But I thought what I would do is I would start keeping a bit of a log just on a trading view here, just so that we can see when I put these videos out what happened with price action, right? And the thumbnails don't tell you the full picture, but they'll give you a little bit of an idea as to kind of where my mind was at the point of recording, right? And obviously I haven't put this one in just yet, but at the point of recording the video, you can see the prices up there. Okay, so let's just quickly review this. This isn't a kind of a shout to say that I'm always right or I'm always wrong or anything like that. It's just to be transparent and factual about things. And so just give me a couple of minutes here, and then we'll get into what's going on with the price action. But we can see over here on this side here, the 9th of March, we put a video out. XRP crash was the thumbnail. There's a lot more context to it than just it's going down in price, but it gives you an idea as kind of the thumbnails are an indication as to kind of where I think the price is generally going to be going to in that kind of short and medium term. These are all short-term price predictions, essentially. All right, we're not talking about macros in these videos. I can, of course, do macro-based videos, and I normally label them up differently, such as like 100x potential, or put the price on the thumbnail, that kind of stuff. But when it comes to all of these kind of ones where pumps or crashes and that kind of stuff, we're talking small time frame stuff. We're not talking large time frame stuff. So this one here, we put this one out on the 9th. We saw a move to the downside, and from the point of recording a video, let's hypothetically say we did it right at the end of that candle there. We came down 7%, right? And if you're a leverage trader, that's quite meaty. That's quite a meaningful amount, right? And if you are into trading, you can check out 𝗕𝗘𝗪𝗔𝗥𝗘, linked in the description down below. Fantastic offers and all the usual stuff that we talk about. So anyway, yeah. So we can see here that we had this move. Then, of course, we put another video update out. This one was over here on the 12th of March. And this one is labeled up XRP pump, right? And will price move to the upside? And from this one, even if we were to take probably the worst case scenario from the top of that candle there up to the high end, we're talking another 6.8%, right? So these are small numbers, but when you're using leverage, they actually are quite meaty. They're quite large chunks. And likewise, over here, we put another video out, XRP pump coming, right? And this one here is on the 17th of March. And you can see, if I take, let's say, the close position of this candle up to this high over here, it was another 6.67%. And we stayed above this swing low. You probably would have put your stop loss down here. So for example, if we were to go long from this video concept here, and obviously these are not financial advice, but if you hypothetically were, and you're going to say your entry was at that point, your swing low is going to be below this area here. So you're down in profit a little bit. You're going to target at least 1.5. I would have thought 1.5, if not more. So you would have seen that today we would have taken profit on that potential trade. Likewise, if you were really greedy, you would have had over 3 points to risk-reward ratio, right? So this was obviously a pump coming idea, right? And we were kind of charting the potential moves and what they might mean and all that kind of stuff. Likewise, up here, we put this brief update out, and this one was all about a potential move to the downside before we continue our run upwards, right? It was a short-term move, just grabbing us down a little bit lower. And again, when this update went out over here on the 19th of March, we've seen a drop of 7.3%, right? So we know that we're doing the right thing on this channel. We're kind of communicating the direction of the market. Now, I'm not always going to get them right. Sometimes they're going to go horribly wrong. Sometimes they just work out, and it's generally all right. So always have good risk management. If you're going to be using something like 𝗕𝗘𝗪𝗔𝗥𝗘, link in the description down below, by the way, guys, for your leverage trading or spot trading, there's always going to be risks associated with that, right? But for the most part, just looking back on the last few days, we've been calling XRP reasonably well. And obviously today we've seen a big move to the upside. So it's time for an update. And let's take a look at the price action and find out what's going on with XRP, right? So we're going to start things off with some Elliott wave theory, right? What is going on with this recent move to the upside? And is it time for a bit of a correction to the downside and all that kind of stuff? So let's go ahead and take a look, right? So we can see that we had this really choppy corrective structure down here at the bottom. Okay, we move up, we move down, we move up, we move down, and then we get this big move upwards, right? So this looks like we are in some kind of corrective structure here. And then we really push up into that final move. Now, the thing with this is we want it to be kind of, really big and impulsive. And the only way we can kind of illustrate that is to look at this structure here as a potential 5-wave count. Now, how can we do that from here? It's really, really difficult. We have to obviously take our swing low, which is obviously down here at 34.73. Okay, so that's going to have to be our low point. If we want this to be impulsive, we're going to have to consider there has to be 5 waves here. Okay, and it doesn't look like that there are 5 waves. In fact, it just looks like this is pretty much done a corrective structure. We'll check our corrective structure first, right? So we take that entire move, we move this fib over to here, and we are short of the 1.618, but we have overextended the typical C wave territory, which would be 1 to 1.236. So we know that we have overextended the norm, but we haven't quite reached those impulsive levels. And it does mean that this could be a 5-wave count right at the end here that hits that impulsive level. So let's go ahead and talk about that. So if we kind of think about this, we have this move coming up, quick correction, push up, quick correction, push up. Okay, that's pretty much a common wave 3 situation. Right? It is very, very impulsive in the way that wave 3 goes. Institutional driven. And if we take a look at smart money concepts, that's exactly what you see here with these imbalances in the order books. An institutional level kind of movement. Big funds, smart money has come into the market. Okay, and that's usually wave 3. So when we see this, that makes us want to think that all of this has to be a wave 1 on this side. However, I don't think this part really constitutes that. I could be wrong, but 1, 2, 3, 4, and 5, but that wave 3 is on the short side of things. Wave 5 would have to be the longest if it were to be an expanding. And is it contracting? It's possible that it's a contracting. So let's go ahead and take a look at that. Okay, so contracting triangles have to be 5. Triangles, contracting diagonals have to be 5 waves, right? And they would basically be 1, 2, 3, 4, and 5. Now, they don't follow the same rules as what you would normally have with an impulsive structure. So a diagonal like this, a contracting or expanding, is basically its namesake, right? So if I find a little bit of an empty space somewhere, just up here, a contracting triangle would basically be, a contracting diagonal, in fact, would be the right words if I can get my words out today. A contracting triangle, a contracting diagonal would be that, okay? And basically what you'd look for is a big wave 1. Wave 1 would be the biggest. Wave 2, 3, 4, and 5, right? And wave 5 would essentially be the smallest wave. And you don't have those same kind of requirements that you would have under the expanding or regular impulsive structure. Now, under an expanding, it's the same, but in reverse. You'd have a small wave 1, 2, 3, 4, and then wave 5 would be essentially the biggest wave, right? And it would be expanding in the way that it would approach, right? So understanding the differences between expanding diagonals, contracting diagonals, and impulsive moves are important, because if this is in fact going to have to be a diagonal structure here, then we're going to have to make this work for us, right? Is this going to be contracting, or is this going to be expanding? So let's go ahead and take a look, right? So here we have this area, pretty decent at the moment. Let's take the low, and we can pull this right up into here, and I would say that looks like it is contracting just about. It's kind of a tight fit, but you can kind of see how it narrows up here. What we'll have to do is we'll also have to just measure wave 1. We'll just use this tool for this. We can see that wave 1 is bigger than wave 3, and it is also bigger than wave 5. So contracting diagonal potentially is in play here. Now, wave 3 is not allowed to be the shortest, so we're going to have to measure wave 3 as well. So we'd check that on here, and yeah, so I think this is a contracting diagonal. It would work quite well within the fitting of what's gone on this side. Then of course we have this structure right here in the middle. Okay, this particular middle area right in here, we have a potential diagonal in itself as well. That's quite interesting. Little 1, 2 in there, little bigger 3 down into 4, and then into that fifth wave. And this one looks to me like it's expanding out. And that, yeah, I'd say it doesn't really matter terribly too much, but I think that's what it is. And this one would be a 1, 2 kind of, I think it's going to be here for 3. Actually, it'll have to be up there, and 4 and 5, right? And it'll be an expanding because from our low side up here, we expand out, and then from the low side over here, we also expand out. So you can kind of see how you have the contracting this side and you have the expanding on that side. Now, why is this important? These things are really important because, let me actually clear that up for a second. If this is a wave 3 situation, then we do have ourselves here a wave 1, 2, up here would be wave 3, down for 4, up to 5, okay? And then we have to wrap all of this up here with a wave 1, wave 2, all of that is a wave 3, down for 4, and up into 5. And this takes us right into where we were talking about the other week, or the other day, in fact, 50 to 54 cent, okay? And that puts us right up in there. Now, because we're talking about this being a C wave movement, we're ending in a 335 essentially, or ending in 5 waves. So there's a lot of things to think about from an Elliott wave theory point of view here. One, we've got some complex structures going on down at the bottom. And then we have this typical kind of wave 3 that's not yet confirmed because we do have to hit that 1.618. That 1.618 comes in at 46.6 cent. Okay, so that's going to be the targeted range that we're looking for. But before we can move up, we have to move down. We cannot just continue to move up in straight lines. We're looking for a wave 4 here, okay? Now, this wave 4 that we're currently in but typically comes down 38.2% from the of this wave 3, right? So if I draw this in, we can see that we would expect price to come down towards 42 cent, okay? Now, there's no guarantee of that, but that's kind of typically what you would expect to see. So if price goes down to the 42 cent range right down here, which happens to also be the previous 1-to-1 ratio, we would also then acknowledge that we'd push up higher than our 1.618. We'd probably comfortably push up towards that into a maximum height of around the 48.2 cent, sorry. So there's a lot of things there to kind of think about. Let me just draw a little box right on top of that, and then I'll just delete all those numbers. So this one here is kind of where our fifth wave target would be, 46.86 to 48.24, right? And then we kind of look at that. That there would basically finish off the wave 3. Okay, so that little fifth wave movement, this little sub count, is basically just one wave 3. Then we have another wave 4 to the downside, another wave 5 to the upside, which would be a bigger wave 3. And then we have another wave 4 down before we go up into that 50 cent range. We might tap into it briefly, correct down, and then rally back up again. So you can kind of see from smart money, from Elliott wave theory here, just how that's mapping out. And it's quite a nice little structure, to be fair. So I don't mind seeing that at all. And of course, this fits in nicely with what we've been talking about as this big ABC structure, taking us up into the 50-55 cent range. So all that's looking good. Let's check out smart money concepts. So smart money concepts, as I said, tracks institutional smart money funds and things like that. And we can see that we've had imbalances in the order book. So right in here, we can see that institutional players or big funds have been buying up XRP, dragging that price to the upside. We have a weak high, so we know we're not done with the highs just yet. We're above the 50 and the 200 EMAs on our hourly chart, riding those upwards at the moment. We've had a bullish change of characteristic, so we do look for a pull downwards, and then we look for breaking that structure or getting that CTS, that continuation of the trend to the upside. My expectations are that we pull back down, as I said, in line with our Elliott wave theory here. So we're looking to come down towards that kind of 42 cent range, and that will then fill out these imbalances. I reckon that we're going to have to probably fill out these two to start with. I don't expect us to come down to equilibrium right now. I think that will come later. Okay, so my expectations are to come down into these kind of fair value gaps that were left behind, these imbalances. That will allow us to correct down our stochastic RSIs that are heavily overbought. So we'll get this little mini wave 4. Elliott wave theory also filling out these fair value gaps, getting our stochastic RSIs corrected. This will allow us to quickly move down here, grab this liquidity or create liquidity in this ranges so that people can continue buying. And then what we'll do is we'll look to break upwards. This break of this weak high in this premium range will create a break of structure that supports this change of character, and that will happen right up here. So once we pull back significantly enough, then rally past this previous swing high level, this will create a BOS. A BOS will basically confirm that we are now bullish on our hourly chart, okay? It'll be short-lived. Obviously, you can catch these things much earlier if you just catch the change of character at these levels. But essentially, we are looking, in my opinion, for more moves to the upside, but we have to correct down first just a little. So ultimately, things here on XRP are looking pretty bullish. And I'm not too fussed or concerned about those. We can also see that our lows are still in play, even if we do push up into this little area. So one of the things that we should consider here is, yes, we'll push up into that kind of 50-cent range like that, but it is a part of a much bigger play that looks like this. Okay, so we can see that there's a Z wave that is going to be comprised of 3 waves. This is a 3-wave corrective structure taking us up into the 50-cent range, and at some point we're going to have to come down and fill out that last little bit. Okay, but ultimately that Z wave should be the end of it, and that should put us in a really strong position continuing to moving forward. So for XRP, I'm thrilled to kind of think about where things are going. Things looking pretty good. Hopefully you found this video useful and informative. If you did, smash the like button, appreciate that. If you're new to the channel, subscribe, and of course join us down in Discord. Until the next one though, guys, have a fantastic day. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.